Yo, what's up, everybody? So, we are back. This is probably going to be an additive to the last episode where we talked about financial literacy. The whole purpose was that just to give a, intro, solid foundation that we'll be able to build upon as we move forward, as we come together as this nice community, cultivating, speaking, and exchanging different ideas, enhancing our financial literacy so that way we can go ahead and use that knowledge to benefit our future. So, just want to expound a little deeper on the credit. So, I had spoken a little bit about credit cards and credit itself and where you can view and look at your credit and pretty much how that impacts, how different things impact, I should say, your credit score. So just want to dive a little bit further into it. I did some reading, some research, and came up with 9 myths based all around the credit. So I'm just going to get into that just for a little briefly. Just talk about those 9 myths based around credit scores. But let me go ahead and speak on this beforehand. One of the major things I did briefly speak on it was Credit Karma or any of your credit cards or bank account online profiles that allow you to view your score. Majority of them will use the Advantage Score method. Just wanted to point that out. That is a great tool. It gives you a snapshot and overview of what's going on with your TransUnion score, which is great. This is perfect. But it is only used in about 10% of the lending decisions. So let's keep that in mind when we start applying for different things. We may see that there's a huge or slight difference between our scores, while the FICO score is used 90% of the time in the lending decisions. So ensure that you get that information. You can get it free yearly, freeannualcreditreport.com. Great tool to use in preparation for making a big purchase, for setting yourself, giving yourself a solid foundation or your family solid foundation to build upon. And with building and accumulating, there's wealth, and we want to be able to manage that effectively and efficiently. So let's get into the myths. So one of the major myths around credit scores is checking my credit score hurts my credit score. Well, it is a myth. It doesn't affect your score. As I said in the beginning, you have different credit cards, companies, financial institutions that allow you to view your score. So every time you're looking at it, it is not affecting your score at all. It is not. And then a lot of people, a lot of different companies will do soft inquiries and then hard inquiries. So a soft inquiry on is something that doesn't reflect on your credit score. And that is someone like an employer or a utility bill just running your credit to see if you have to make a deposit or to see if you pass that background check for employment. Where hard inquiries could be a telephone bill, credit card, car loan, or home mortgage. So that's a little brief information. Those are the things that will affect your credit score. But just looking at it, it's not going to affect your score at all. Other thing is, second one, number 2, if I pay my bills on time, that's all I need to worry about. Another myth. A lot of people believe that paying their water bill or paying their rent on time is actually boosting their score. It's not. Once you are approved from a lender and making on-time payments with them, that improves your score. Making those payments on time does, and that's one of the factors involved around credit. The payment history. You're 8 out of 10, that's 80%. So keep that in mind. Missing a payment is not good. If you do, it takes forever. It takes a long time, and you have to be patient with that, because that 10th payment will have to turn into the 100th payment, and you didn't miss any anymore after that. So that's almost 6.5 years if you're starting now and you see that you've missed three out of 10, 2 out of 10. We want to be above 90%. So those are the type of bills you want to pay on time. Your credit cards, you want to pay those on time. You want to pay your mortgage or your mortgage on time. Even your rent, you want to pay that on time because if you fall delinquent, get evicted, and it can go towards the collection aspect of your credit, and that negatively impacts your credit score. So those are the bills that you always want to pay on time. And in addition to what I want to add to this category is the utilization again of credit cards. Maintain 30% or less when you're using your credit card limit. So if you have 100, only spend 30. If you can spend, or if you need to use up the entire credit limit, ensure that you're able to make that payment immediately within a week or two time. My rule is if you don't have it in your account at that moment to go ahead and pay on the credit card, just don't use it. Don't do it. The other option that I like to use, because you may be a point hustler, a rewards hustler like I am. So I will use the credit card on one day and I'll pay it off the next time, the next day. So charge one day, pay the next day. Charge and pay day after day. That is the way. So what makes up your credit score? We're going to dive into that. As I said, FICO, VantageScore 3.0. There is a slight difference between the two. So I'm finna show you. FICO score is a credit mix, which is like different types of credit that you've been approved for, whether it be lending, car loan, mortgage, just a different mix, department stores. That's 10% of your credit score. Also, whenever you get approved and it's a new line of credit, that's 10% of your credit score. Then you have the length of your credit history, which means how old are you? How long are those accounts been in existence? And it's a totality of accounts, all of your accounts in the average. So the length of your credit history affects 15% of your score. Then you have amounts owed at 30%. The amounts owed would be, I have $100,000 and I owe $50,000. So 50% there that you owe and that's still outstanding. So that would be amounts owed, and then 35%, the big dog, payment history. Make those type of payments online, the ones that are showing on your credit score. Pay them on time. Be fiscally responsible. Then we have the VantageScore 3.0, and this is how there's a difference between what we see on Credit Karma and then when we actually go and apply for a car or for a house, we have a completely different credit score. Mine was, when I got a new vehicle, mine was in the 630s or so, showing on Credit Karma. But then when I went out and got that new Nissan Murano, then my credit score came back at 730, 100 points difference almost. So there's different factors in what they look at. VantageScore 3.0, it is available credit is 3%. Your recent credit, which would be inquiries on your credit score, is 5%. The balances that you owe, 11% that affects your score. The depth of your credit, how deep are you in debt, affects your credit score. The utilization of your credit cards, and 40% is going to be the payment history. So I went through that, but you will see a screenshot over that so you guys can see visually what it is that I'm talking about. Alrighty, good stuff so far, moving in the right direction. Getting rid of these myths, coming into the truth. It's always best to be in the light. So, opening a new retail credit card is good for your score. I don't really know. I I don't know if that's really good, if that's really, really a good thing for your score. Because it doesn't, in some cases, it doesn't even show in your credit report. So if it ain't showing your credit report, how is it improving anything? It's just you got a card that you can go shop at that particular store and not getting any benefits outside of the store. A lot of people love their cash back. Can't get cash back over there. Mm-mm. Another common myth. It hurts my credit score to comparison shop for a mortgage, auto, or student loan. Every time I go here and I go there and I keep running my credit for these types of loans, my score keeps dropping, dropping, and dropping. That is not true. There is a range for which you're doing a lot of shopping, given these particular, if you're refinancing your student loan, car loan, getting a car loan, refinancing your mortgage, or trying to get that home mortgage purchase, to purchase a home, to initially get the loan. So what happens is with the FICO score, which is used 90% of the time, with their scoring models that lenders might look at, with shopping periods ranges from 14 to 45 days, during which multiple inquiries count as one. So you get a whole month and a half to shop around. To shop around. So do not fret, your score is not dropping, you're not getting 500, 5, 6, 12 different hard inquiries, which is negatively impacting your score. That's not happening because they allow you, as long as within the same realm of you applying for lending, it's not going to affect your score. Credit cards, going around a different department store and getting, JCPenney, Macy's, Express, Children's Place, any of those, and then you're going around to the different banks and you're applying for those, multiple inquiries will start hitting in that regard. But if it's the same, you're looking for a house, I suggest once you find the house that you're looking for, then go ahead after you get it pre-approved and everything, to start being competitive on where your loan is going to be, so you ensure you get the greatest rate, and the majority of your payments are going towards the principal amount. So the lower the interest rate, you sign documentation for that. Do not sign for a high interest rate, because then it takes forever to pay that loan off, and they would have won in the end. The banks would have won in the end. So you have 14 to 45 days. If you're shopping around trying to find out which bank is going to give you the greatest rate, or which student loan company like SoFi is going to give you the best rate in refinancing your student loans at a great interest rate. And then in order to even get the great interest rate, what you got to do is make the payments on time. Got to be on time. That, as we said, that takes up a big chunk of your payment, of your overall credit score. That's 35%. And don't even have to worry about the amount that you owe, because as long as you keep making the payment, what you owe keeps going down on the opposite end. So altogether, those work hand in hand and beneficial. So the next myth is, the older my unpaid debt, the more it hurts me. Late payments hurt you. Falling into collections hurt you. Getting foreclosed on, emotionally, physically, financially, it does hurt you. And those are the things that hurt your score. And you're going through any type of bankruptcy, that hurts your score too, because it's going to rest on there for 10 years. While all the others, like collections, derogatory marks, they can last between 7 and 10 years on your score as well, and that is a long impact. That is forever. That's a long time. So those are the things that would impact your score. I wouldn't. The older my unpaid debt, no, that's beneficial. That helps you age. That helps your overall average age when we're looking at your credit score, that you've been a lender for 9, 10, 8, 7, 20 years, 30 years, that doesn't hurt you at all. That actually is beneficial. Take your time paying off those debts. Take your time paying off your mortgage, which we will talk about in another episode. You might not want to get rid of that mortgage so quickly. You might want to extend those payments, but we'll talk about that later. The next myth is going to be selecting credit while using your debit card for a purchase is good for your credit score. Your debit card, it is linked to your checking account, or you have an ATM card that's linked to your savings account. Debit cards don't have anything to do with your credit score, because there's nothing on credit. It's your account, money goes in, direct deposit, cash goes in, refunds go in. There's no lending involved in that. There isn't a huge background check to get approved for a debit card. Just need basic information, and you have an account, and it's up to the job to go ahead and do the rest. It's up to the bank, to go ahead and do the rest. So yeah, it doesn't no, not at all. It doesn't affect you at all. That's mythology. It's mythics. That ain't true. Oh, credit reports are accurate. That is also not true. That is also not true at all. But and the last one, the last myth, the one I think we've talked about a few times as we've gone through these one by one. Credit reports are accurate. By now, we should all know that they're not accurate at all. You got a TransUnion score that gives you something. You got an Experian that gives you something. You got an Equifax that gives you something else. They're all not the same. Furthermore, each type of lending that you're going after are looking at things differently. As I said, my TransUnion was 6 something, 7 something, but then the report that came back, the one that mattered most, gave me a 737. And that's something I posted on Facebook. Y'all can scroll down and take a look at it. I gave pretty in-depth information about that as well. Because yeah, you guys will see some of my personal banking information, credit scores, different things that I do, budgets that I have, because I want to be transparent. This is a journey. I want all of us to know and see the progression as time goes by. With me personally, my finances, I feel this is the way in which I am going to advise many people. I want you to know that it's working for me individually. I'm following right instead with everybody else. Sharon, I'm using my information, get me in the right spot, keep me in the right spot, and I want to get y'all to the spot on that. But yeah, so the scores are not always the same. FICO score is completely different as I broke it down. Different factors that come together within the whole pie that gives you your score. Then you have Vantage score, and there's different type of scoring methods out there besides Vantage, FICO. There are plenty others that are out there as well. So that's a little completely different. So don't look down on the score that you use occasionally and think, my score is terrible. But then all of a sudden you're getting approved for a credit card, because what you're looking at may not be what the lender is looking at. So they look at completely different factors as far as income also. Some of them look at your income as far how long your income, your income as well, but how long you've been employed. So there's a completely different list of factors that are out there that attribute to your score. So I just want to end it by saying there ain't nobody that has joined the Dove Club, but that's okay. That's okay. It's all right. It takes time. It takes time, and I'm going to be patient because I know and I believe in what it is that I'm doing. I want to present it. I'm going to keep on presenting it to you, but I do need your help. Resources are finite. I mean, we all love the Avengers movie. He said it best. Thanos said it best. Resources are finite. So they can only last for so long. So I do need your help. One great way, like, comment, share, follow, and please join the Patreon. Just low as $5. You can join the Dub Club. $5 all the way up to 50. So anything will help. If you just want to donate, that would be great also. But yeah, you can head over to the Patreon, $5 a month. You can view all of my posts. They'll be coming earlier than what YouTube and Facebook will get because you guys are the paying viewer. You guys should get it first, not all at the same time. So yeah, please support, please help. Help me, I help you. We help each other rise together. Peace. Man, oh man, I've nearly forgot. I'm new to this, but eventually I'm new to this, and I am becoming true to this. Let me correct myself. So, I got the art of homage on today. It pretty much just says, as you saw at the beginning of the clip, I'm gonna reiterate. It says, I create for the glory of God alone. So I just wanted to tribute, I picked this shirt, I thought it was pretty cool coming from the art of homage because he blessed me with a gift and I want to make him proud by exemplifying and sharing the gift, not only for myself, but for others as well. So this is my gift. Numbers is the game. It's the game I play and I use it to help me get to the situation I'm at, being able to do whatever I want, you know, in a timely fashion, of course. I can't do it at the drop of a dime just yet, but I'm working on it. But yeah, I just wanted to use my gifts to help people. So I like this shirt. You guys should, I'm gonna drop the link below and within the podcast. So that way you guys can go get your own nice little gear. I'm not getting paid for any of these shout outs yet. But again, my whole purpose is to uplift people, I mean, in their businesses, clothing lines, the movements that people are putting out there. The different podcasts that are out there, like the Pit podcast, my dear friends Darnell and Dom, speaking wonderful, wonderful things, different topics that they come in, being transparent is the key word, transparent. You're gonna be hearing that a lot because that is the best way to go. People really know and understand where you're coming from, they'll listen to you. They'll listen to what it is that you have to say. Once they see you visually, walking the walk, walking what you talk, I mean, there it is, right there. Be who you are, be within your truth. Use your skills, the things that you're passionate for to help others. So that's really what I want to push. That's really the reason why I'm doing this. Every shirt, this isn't sponsored. This wasn't, no. This is something I saw, wanted to support it. I'm going to shout it out. Each and every episode, I'm gonna be shouting somebody out. You might be shouting the same person out over and over again. But until we get sponsors, and even after we get sponsors, I'm gonna keep supporting people because when we support each other, everyone wins. Everyone wins. So, yeah, that's my little bit. Peace out.